Before February 1st, Trump's proposed tariffs are creating a short-term window that smart investors are watching closely. When tariffs are announced before implementation, markets tend to move early, especially commodities, domestic manufacturers, and logistics stocks. Companies that rely less on imports usually see increased demand, while import-heavy sectors rush inventory ahead of the deadline. This isn't about politics, it's about timing. Tariffs shift supply chains, pricing power, and margins before they ever go live. And historically, those early shifts are where the opportunity shows up first. Let's check out this clip.
Trump didn't just announce tariffs, he triggered a global reaction. And most people are going to misunderstand it, which means they'll probably miss the moment. This is not about panic, it's about positioning before the relief rally. Now in this video, I'm gonna show you what moves matter, what usually happens next, and exactly how I'm positioning myself. And we're gonna go through not just one, not two, but three different areas in the market where I truly believe we can position ourselves for this opportunity. It's your boy, the Wall Street Trapper. Y'all know my goal is to help you build wealth one share at a time. Before we get into this video, man, make sure you like, make sure you subscribe, and make sure you share this. It truly helps the channel out. And let's help us get to 2,000 likes in this video, all. Let's go. After the markets closed, Trump announced 10% tariffs on 8 EU countries: Denmark, Norway, Sweden, France, Germany, the UK, Finland, and the Netherlands. This goes into effect February the 1st, and they increase to 25% by June 1st. On the surface, this looks really random, but trust me, it's not. This is leverage, and this is typical Trump. We've seen it happen before. We've seen him make moves like this when the market closes so the market can digest it. Now it's a 3-day weekend. Markets open back up Tuesday. Everybody gonna be looking at futures since Monday night, and this is how it happens. This is about Greenland. Greenland is not a joke, y'all. And we've talked about this a couple of times. So let's just run through this right quick so we can just get to the facts right quick. So Greenland matters for 3 reasons. And once you see this, I promise you can't unsee it. Now, this is the power game. First, we got to think about shipping lanes. As ice melts, Greenland sits next to, well, new Arctic shipping routes. Of course, China and Russians have been positioning themselves there for some time now. Now, this becomes shorter pathways between North America, Europe, and Asia. And whoever controls that actually controls the way we do business moving forward. We understand that these lanes give you decades of leverage. Imagine having to pay China, having to pay Russia to get through these lanes. You don't want that. And next is about these rare earth minerals. Greenland has untapped rare earth minerals, something that we'll get into right after this. And right now, China controls most of the world's rare earth supply, probably about 70 to 80%. This is another reason why America wants Greenland, because the goal is not to be dependent on China. You definitely don't want to be dependent on China. Rare earths, well, they aren't optional. They're using everything we need in AI, defense, EVs, chips. I mean, we need them. So this is just about power, y'all. Now, thirdly, it's about military. The U.S. already operates a major base in Greenland. Trump isn't talking about tourism, y'all. He's talking about making sure we have power. That's what this game is about. It's about positioning a country for the next few decades. Greenland is an aircraft carrier made of ice. If Greenland matters, then these are the first places that I think that we should look at first and foremost. Before we go any further, if Greenland is really about rare earths, energy, and control, which we think they are, which we know they are, then these are already companies positioned for this. So let me walk you through these 3. It's not hype, it's not speculation. These are real businesses that are directly tied to this shift, and they already up massive year to date. First and foremost, we got to look at MP Materials. All right, what they do, let's talk about that for a second, right? MP Materials runs the only large-scale rare earth mine in the United States. They mine and process rare earths, well, that go into defensive systems, EVs, AI hardware, semiconductors. This is MP Materials. And just so we know, the stock right now is up 31% year to date. So why Greenland connects? Well, Greenland is about breaking China's rare earth dominance. We got to break it. And MP is already domestic backbone for America. So if China controls 60 to 7% of global rare earth processing, the U.S. can't scale AI or defense without rare earth supply, which means we'll have to depend on China, which is why China wants to defend Greenland. Well, MP already has DoD contracts and government support. They already positions. You don't build a power system first. You secure the inputs. And MP is already an input play. I just want to put that out there so we understand what's going on here, right? So China's going to come to their rescue for a second, or at least act like they are. But again, nobody really wants smoke like that. Next on the list is UUUU, right? What do? Well, they energy fuse, produce uranium and rare earth elements. That's right. We're going to talk about uranium a little later, so make sure you stay with me. That combination matters. Why? Well, because uranium equals nuclear power and defense, and rare earth equals AI, weapons, and grids. So UUUU is unique. They're one of the few companies in the U.S. that can process both. They already operate outside of U.S. borders. So the Greenland is about future supply. And let's talk about them. They're up 39% year to date. So UUU is about current domestic capacity. UUU sits at the intersection of energy security and mineral importance, and that is key for America. And last on the list, we're going to revisit this one, y'all. We got in there early. We went to 42, and then we got out of it. So let's revisit this one. None other than USAR, right? USAR. Right now, the stock is up 38% year to date. Now, what they represent, this is a strategic reserve play. Companies like USAR exist because Washington knows one thing, and one thing for sure. You don't want your supply chain to start in Beijing.
Whoop-de-doo.
Yep. Defense systems require guaranteed access. AI hardware needs consistent rare earth flow. The government is willing to subsidize this space. And this is why Trump keeps saying, we want Greenland. We want Greenland. Now, we know Trump understands that this will truly be a situation. These aren't market trades. These are policies that are backed by businesses. And so we got to keep that in mind when we're thinking about this. Now, that's just one part of this video. Let's segue to the next part of this video. When tariffs get announced like this, markets react the same way every time. Headline screams, futures drop, fear spreads, accounts go bloody. And then the next phase comes. We hear the EU gonna probably double down. They gonna rebuttal. Trump gonna double down. Then we're gonna hit negotiations. And then we're gonna get a relief rally. Now the problem is you gotta be willing to endure what you're about to go through. So we saw this in October with China tariffs. We saw this before with Liberation Day. We've been here before. And actually, if we're being truthful about this, guess what, y'all? We needed this. I've been telling my group for some time. I've told you for some time. I think the market's going to definitely fall because we're hitting that 7,000 area on the S&P. As a matter of fact, let's just talk about that for a second. I want to take us to the SPY right quick. And this is going to be interesting for us. And so the first thing we're going to do is we're going to go to the weekly, right? And as we go to the weekly, we're going to talk about something that we've talked about for quite some time, but it's important that we see it. And so here we go. We're going to start here on the SPY. I'm going to bring out my trend line tool, and we're going to start here, right? Notice how we see this, right? And again, I'm not acting like I'm just this brilliant person. I'm just showing you this because I think it's important. Once you notice this, you'll see exactly where I'm coming from with this. So we see what this trend started at right around COVID. If we notice something on the chart, let's just look at it right quick. We see around COVID, we saw this, boom, then we got this rally. And then we had this where it hit the all-time highs, and then we got this, stage 4. But notice it hit this line, hit this line, hit this line, and then we got this. That was the Joe Biden stock market. I say that because of Trump. And then notice we got this right here. This was the Trump tariff lows. And now here we are again, right back in this area. We right back in this area. Notice we hit, Then we came down, and we've been rallying really close. Now, we know that we're going to get a little sell-off going into this week because what's happening. But then I want to bring you here. I want to take all this off, and I want to bring you here because this is going to be really interesting. When I looked at this and saw this, I said, oh, man, this is critical. And so one thing I try to do is spend time on a chart so we can see certain things. So notice this. Let's start here, right? So let's start from this Liberation Day. Right? Let's start from this Liberation Day. Right here. Look at this. That's not the same as I showed y'all going back to COVID. This is Liberation Day. So this is the Liberation Day lows. Notice we got these touches. We got 1, 2, 3 touches. Now, the interesting part about this is if it breaks this low, if it breaks this trend line, I want to show you something. This is going to be interesting. So as I look at this, I'm saying, okay, and I've been saying there's a few numbers that I'm looking for the market to go to that I was calling for, which is why I wasn't heavy in doing a lot of things. I was kind of mostly in defense with my squad and the Patreon. Right, so here's a couple levels that I'm really pay attention to, key levels. One, this first level is going to be, the deep level going to be right here, the highs of the tariffs when the tariffs hit. We call them the Twin Towers, not the original tariffs when he came back in October. That was the October 10th tariffs right here when he put the tariffs on China. So that's going to be a first level. So now here's a key level. Another level that's going to be real interesting to me is a level higher, which would be this first level right here. And the reason why, because we bounced off that level, but notice this was an interesting level right here, all the way to here. Right, so that was a real interesting level for me. I'm gonna pay attention to that. Right, and then finally, what I want to talk about is this level. So those levels are essential to me. Right, and then of course you want to make sure we don't break. And these are just me giving myself expectations on what I see coming. This is the main level for me. This 650. So these are 3 levels that I'm looking for. Right, 688, 673, and then 652. Now, watch this, what I'm about to show. And the reason being, this is a high. I want to see if it comes and touch that. This is a high right here. See this high? Came all the way. Really, we can go here. We'll go 688 because that was a previous all-time high, a little below that. Notice that right there, we wicked and then shot up. So I'm looking at that 688, which it'll probably break. And then it's important because that'll break that trend line. So that'll be important. That'll be key for me to see. The next level will be on the top where the Twin Towers is, which is 673. That's going to be an important level. And then 682. Now let's measure that move though before we go further into the video. Let's measure that move from all-time high. From a measured move perspective, the first drop to 674 gives us a 2% drop. 3% drop, not bad. The next move to 650 gives us a 6% drop, not bad. Now, here's where things get interesting at. Here's where things get really, really interesting at. So we come here. Now, this was before the tariff sold off at 612. This is an 11% drop. So if we go all the way back to where the terrorists hit us at, this is the Trump sell-off with the terrorists, that gives us an 11 to a 12% drop, all right, from current high. Let me make sure I got that up there right. Yep, from the high. That's 11% drop. Now, let me show you something that's real interesting. Don't leave me yet. Don't leave me yet. All right, on the same daily chart, I want to show you something that's real interesting, right? So if we took this from here, which was July, watch this. Here. Notice when it broke that trend line from July. Now that one's a little up more. Notice when it broke that line, what happened? A complete washout. Right, we had a complete washout. Once it broke that trend line, touch, complete washout. And that's interesting. I'm interested to see if that happens again. Now, let's talk about this measure move. That measure move is 18%. That's interesting, right? That's at 18%. Just once it broke that line, not even talking about the whole, so that's the tariff play, that's 21%. So I'm interested to see what happens once we break this trend line from these tariffs on the S&P 500. Let's get back to Trump's playbook. If you understand the playbook, then you don't panic. You just kind of prepare for it, especially if you went through this last year multiple times with headlines. It shook you out of position. Once it shook you out of position, you sold your positions. Probably the day after you sold, stocks rallied. Let's not panic. Let's be cool. Now, before we get into some more stocks, I want to talk about a win that I think is for sure here. For the past 5 years, gold averages about anywhere between 19 to 20% annual returns. But last year gave us a return of 69%. This year is already up 5%. That's not normal, y'all. That's a signal. And I want us to pay attention to it. Now, I'm not about to say the market about to crumble because y'all know I'm forever bullish, but I do like to pay attention when I see things coming. Here's why I think it's a signal. Central banks are buying gold because they're losing faith in fiat currency. Now, 20 years ago, 70% of the reserves were in dollars. Today, it's 58%. Well, that's about a 16% decrease in central banks. And over the last 3 years, we've seen central banks buy over 1,000 tons of gold. That's important because gold doesn't just spike unless something is truly seriously breaking quietly. And I want us to pay attention to quietly. We're seeing gold rally the way it is, so I think gold miners and junior gold miners are truly going to be essential as we move forward. Now, let's talk about the third opportunity I see for us. The third opportunity is none other than uranium. Let's talk about it for a while. It's the most misunderstood energy trade of all time. Now think about this. Trump just spent $2.8 billion on private nuclear companies. The goal? Energy independence. Well, uranium isn't just about power, right? It's just not about power itself because it powers submarines, it powers aircrafts, defensive centers, and it becomes high quality ammunition. 1 kilogram of uranium produces more than 30,000 tons of coal. That's crazy. This is efficiency at a national security level. So the three companies I want us to look at is one, Cameco, CCJ, right? It's the backbone supplier, right? What Cameco really is, simply, it's a utility company. It's a utility company for uranium. And when governments, nuclear plants, and power operators need reliable uranium for decades, they don't gamble. They go to Cameco. The company is up massive year to date. One of the largest uranium companies in the world, actually largest producers in the world. They supply uraniums to utilities across North America, Europe, and Asia. They operate in politically stable regions, Canada, the US, known for long-term supply contracts, not just spot market speculation. This is important because nuclear power plants take years to build. They operate for 40 to 60 years, and they cannot risk fuel disruptions. So utility, well, it's a lock-in for uranium in advance. So CCJ wins this cycle because governments are extending nuclear power plant lifespans, right? New reactors are being approved, new security for energy is being approved, and is now a national priority. This is what Trump is trying to do. So think about it like this. CCJ wins because the rise in demand, higher contract prices, long-term contracts which equal revenue stability, and visibility from institutional confidence. So Cameco doesn't benefit from hype. No, it's not just a meme stock. It benefits from governments refusing to gamble with power. It benefits because uranium is next up. So you should definitely check that out. Number 2 on the list is none other than Centrus Energy, ticker symbol LEU. This is the bottleneck company. This is the one most people don't understand. And we'll clear that up for you. So the ticker symbol is LEU. Centrus doesn't mine uranium. They actually enrich it. So enrichment is the choke point because enrichment is critical for uranium, which is why Trump had a $2.8 billion enrichment deal. So raw uranium cannot be used in nuclear reactors as is. It must be enriched, meaning power civilian nuclear plants so that they can fuel U.S. Navy submarines and aircrafts so that they can support advanced reactors. Now, here's the issue. The U.S. lost most of its domestic enrichment supply to Russia, which currently dominates the global enrichment through Rostom, and then it's a national security problem. And then Canada is number 2, and y'all know how Trump been dealing with them lately. So here's where LEU fits at. Centrus is one of the only U.S.-based enrichment specialists with existing infrastructure, government relationships, and active Department of Energy contracts. That's right. So when policymakers say we need uranium independence, when Trump says we need uranium independence, when Trump says we don't need to be dependent on foreign companies, they're talking about companies like LEU. And so LEU has leverage because government funding flows directly to enrichment. Contracts are strategic, not cyclical. This is not optional spending. It's defense and energy all wrapped in one. And so this is why I like a company like this, because it's not optional. They got to buy it. And so right now I'm trying to be on the other side of the game where not all the volatility is. So mining gets ahead. Enrichment decides who actually controls the nuclear power. And what we cannot deny is that nuclear power is necessary, especially if we believe in AI. Now, third on the list is Uranium Energy Corp, ticker symbol UEC. Now, mind you, all of these companies are up big on the year, and they're not slowing down. So UEC focuses on uranium energy. Well, it's US-based company. Again, we don't want to depend on other countries. Well, let's make it just sound simple, right? Why does domestic uranium matter? Well, for decades, the U.S. has relied on foreign uranium, foreign processing, foreign enrichment. But as we can see with Russia and China, America like, bro, we got to stand on our own 2 feet. And if you don't like Trump for nothing else, I at least got to say, I respect the fact that he wants us to stand on our own 2 feet. The work is a globalized world. That doesn't work in the world we're in right now. Supply chains are weaponized, sanctions are routine, and energy is geopolitical leverage. So UEC benefits because it's US-based uranium projects, lower geopolitical risk, faster permitting relative to foreign assets, and then it's positioned for government support. This is what we like, right? So when policies prioritize domestic sourcing, UEC wins. Utilities want safe supply chains, UEC wins. They want strategic stockpiles to expand, UEC wins. So it's higher risk than CCJ, more speculative than LEC, but more sensitive to policy shifts. And this is why we love it. And so these are the 3 companies that I'm truly looking at when it comes to just that uranium. I know it's not the Apples or the NVIDIAs and all of that, but I think that's some of the biggest wins right now and things that people are overlooking. This is why we made some defensive move. I told y'all a while back about KTOS is going through the roof. Why? These aren't the names that everybody talking about. So even when volatility strikes, defense has not broken. And the reason why defense has not broken is because this isn't about growth cycles. This isn't about AI. It's about contracts. Defense budgets don't get cut during tensions. They actually amplify. And believe it or not, we're staring World War III in the face. These companies going to expand. Greenland, Ukraine, Taiwan, the Middle East, all of it points to the same thing, y'all. Geopolitical tension. And if we can sit back, there's a lot of money to be made. If we can endure the knee-jerk reaction, there's a lot of money to be made. Because defense doesn't need chaos. It benefits from countries trying to prepare. And the one thing we can say is America is preparing. And so this is how I'm thinking about position moving forward. I'm not betting the house. No. We're not doing that. But we are scaling. We're scaling into positions, whether it's option plays, whether it's buy and hold, because volatility creates better pricings, not reasons to hide. This is how money moves are being made during uncertainty. So while everybody is running and hiding, smart money waits for panic and then it positions. And trust me, y'all, a lot of people going to be panicking when the market's open Tuesday. I just need you to position. This isn't about calling bottoms. It's about positioning ourselves so we know we can get the best return on our money. And it's about exposing ourselves to the right circumstances. It's your boy, the Wall Street Trapper, man. If this video helped you out, make sure you like and subscribe and tell us how we can help you even more. Share this out with somebody, because here's the last thing I want to tell you before I go. Most people wait for headlines to calm down before they get into the market. But then prices, well, they've already moved. They've already making the big move. And then you start to chasing. People want certainty. In order to be great at this game, you got to be able to be in position when it's not certain, but you see 3 steps ahead of everybody else. It's your boy, the Wall Street Trapper. Salute.